Good morning, guys, and welcome to today's edition of the London Session Open. Today is June 18th, 2020, and it's 9:50 a.m. in London when we are looking at the markets. We have the next 10 minutes to see what's happening, talk a bit about the different levels that people are watching, and where I think people are buying and selling. But as always, this is made with an educational purpose and just to show you what I think people are doing. And even though I have quite a lot of experience doing this, I don't always get it right. In fact, I lose quite often. So what's the key then? Why am I here talking to you guys? Because trading many times is about the risk to reward ratio. Not for all strategies, but for my strategy, which is trend following strategies, the gain tend to be much bigger than your average loss. So what happens is that, make it very simple. Imagine you are walking somewhere. Ideally, you just walk straight. You just go directly to the shop. No detours, whatever you want to buy, whatever you get what you want, right? However, when trading, it's not like that. Many times is 2 steps forwards, 2 steps back, 1 step forward, 2 steps back. That pattern actually is the typical pattern of retail traders. 2 steps forwards, sorry, 1 step forward, 2 steps back, 1 step forward, 2 steps back. When I was working for a big broker, we looked at I think about 100,000 real accounts, and that's exactly the typical retail trader. The typical retail trader is right 60% of the time, but he will win 100. He will gain 50 pip in the euro dollar, but every time he loses, he will lose 100. So even though he's right 60% of the time, he has that pattern. In my case, it's more 2 steps forwards or 3 steps forwards, and then maybe 2 steps back or 1.5 step back. So I have the different pattern where when I go forward, those gains are bigger than my typical losses, and that's the key to my strategy, and that's why I'm here. So what are we going to do now? We are going to take a look at the charts as we usually do, and we're going to begin with the euro, where things are a bit quiet. So we talked last time on Monday. If we look at the price today, because there has been a few trades since then, but if we ignore that for now and just look at how the charts look like today, well, the market remains bullish above 112.04, which is just pretty much where yesterday's low is. And as long as tradable this level, we might go up to maybe 113.41, but take this out and we're probably going to head down lower. If you look at some other pairs like the Aussie dollar and the New Zealand dollar, they're all trying to carve out major highs, much like this one. It doesn't mean that we will have a major high in those markets, but a bit of a pullback would not be unsurprising, especially if you look at this from a big picture perspective. If you look at the daily, what I said to you guys was that over here, people probably going to sell to attack downside, and that's where we are right now. And I'm going to continue to be bearish as long as you're below 115.52. But when you trade against the trend like this, because we reached this levels already on June 10th, then it will take some time. It can easily take some time before this is actually I mean, it's been 8 days spending time here, and that's one of the reasons as well why I don't like to trade against the trend. You'll be waiting like 8 days and it might work out. Doesn't mean so what usually happens, you need to have very wide stop loss orders. So when does the short-term trend align itself with the big picture? Well, it will align itself on a break to 112.04. Right, here's the pound versus the US dollar, and this is gonna be a choppy day today because we have the rate meeting today, and it tends to be very, very sort of strange. You get all the headlines, and then you get the Q&A, and then you get some other stuff, and it all gets a bit confusing. And in the GBP versus the USD, we do not have a good solid pattern to work with. We don't. I do think, however, that if we trade below something like 24.47, that we may go a bit lower, and we might have a continuation of this little downtrend that started, and we might come down to 123 or maybe 122. But this is not where I would be looking at. Take a look at Euro GBP instead. In Euro GBP, you'll see that we're trading within a nice little range, a nice little rectangle. Now this is a nice healthy pattern, which is quite straightforward. Bullish breakout goes upwards, bearish breakdown goes lower, and the difference is 200 points, 200 pips. So this is what I will be looking at, okay, on the break. Now, because the pound is the pound loves to have a false breakout. It just loves it, but it's not consistent enough that I'm going out and saying, all right, every breakout, I'm going to go against that. Because what happens sometimes is that when you start to go against the breakout, the thing doesn't come back and it just declines with some 500 pip or something like that. And then you wish you never tried that strategy. So what's the solution here? One solution could be wait until the press conference is over at least. Let's see what happens after that. Alternatively, just wait until tonight. Now, if you want to get into the action, just look at these levels. Then you can just look at something like 88.61 and 90.59, and then that's it. You just look at those. But remember, it might be you have the statement or the initial part where they talk and people get all excited about the pound, and then if they do get a question and people don't like the way they answer the question, and it's obviously the questions usually that tend to be important anyway, then you have a situation where you can have a false move. All right, moving along here. This is dollar versus the Japanese yen. Dollar Japanese yen, if you look at this, we just trade targets from 105.90 and 107.27. All right, it's very straightforward. I'm bullish from between 107 and 105.90, and I think we can go up to 108 and 109. But we've been here since April, so we might easily spend here a few more weeks before we head higher. If we look at gold prices, they're really interesting. Now they're trading within a nice, beautiful rectangle pattern, and we talked on June 7th, and before that we said we can probably buy here for this to go up. It did go up. Still haven't had that breakout. So if you're not in the market, what should you be doing then? I like the break to the high. I like the break to the bottom. Very straightforward. Until that happens, I'm not doing anything here. If you're really bullish, then you can get involved on a dip. But right now in the middle, my guess is as good as anybody's. Here is the price of gold as a crude. So crude oil prices. So when we talked on Friday, we talked about potentially having a second wave of coronavirus. So what happened ultimately though is that that still could happen. And I was looking at the numbers for Florida, and they're still quite elevated. What happened ultimately is that the Federal Reserve announced that they were going to do some more market stimulus. They're going to buy corporate bonds, right? And that's the new thing. And that obviously got the market by surprise, because otherwise the market would not have risen the way it did. The Dow Jones was like down with 2% and then closed positive on the day. That's how you know it's a surprise when you have that big move. And even though I think I know good, important people, unfortunately, I don't know anybody at the Fed. So I didn't know that was going to happen. And most likely, very few people knew that was going to happen. Because again, you wouldn't have had that move if people knew. You could have guessed it, but yeah, I had no idea that would happen. So obviously what did happen is that we went down and we bounced perfectly from this buy spots that we talked about. And the drawdown was minimal. We bounced here amazingly good and we went all the way up more or less. This is a good little spot to book profits. There's nothing bad with that. And also, if you wanted to buy there, sometimes what you have to do is you need to sort of ignore the news, and then you take a decision on that. So was it right or not? Well, in the Dow and all these different markets that we talked about, I was still bullish according to the technical analysis. And as you know, we went all up. And here's a very good example of that. Personally, though, the way I look at it, I look at the technicals and then I try to make sense of the news. And then I decide if I want to trade that technical pattern with the help of the news. In that specific situation, I decided that I did not want to trade that specific. I did not trade crude. I did not trade stock markets, even though in hindsight it was obviously amazing trades. So that's the way I look at it. What I don't do though, which a lot of people do, is that they have their preconceived views on how the world should be and what the Fed should do and shouldn't do. They have that view and then they just trade on the back of that with total disregard for their technicals. That I do not recommend. I do recommend though, what I do is you look at the technicals, you have your chart, and then if you think that the chart doesn't agree with the news, you have some discrepancies, you can decide if you want to trade that. But when it does agree, that's when I trade. So looking at this today, then what should we do? Well, that entry was amazing, and ratio wise and everything is looking solid. And if one is not already in the market, then you're looking for a pullback. If you look at the Dow Jones, the S&P, actually let's look at the Dow Jones. If you look at the Dow Jones, this is, we lost, in the beginning we said look to buy here, and we had a perfect entry here as well, more or less. We went up, and well, we're coming down a bit again. My new trend defining level is the June 15th low. So as long as you trade above that level, I'm going to continue to be bullish. And I think we can go upwards. Now, if we go down, which would not surprise me, if we go down to 25,842 again, I think people are going to be buying. If you look at the German DAX, this is the German DAX here as well. We talked about buying here. That went okay. And we went up a bit. And if we go down to 1273, I'm going to be bullish between that level and this level here. If you're a scalper, you know what you're doing. If we take out the high, as you might guess, we might go up a bit. As for the FTSE 100, I had an idea to buy, and we're pretty much, I think, slightly positive, break even. And people that are not in the market are probably going to wait for the decline to 6104, and also being bullish above 5888. I think we covered everything. Yes, we covered everything. Let's just see if there's any questions here. Then we need to go. Actually, it's more than 10 o'clock. So we are having some problems with the website today, so you're aware of that. But the developer is back online now, so we should be okay. Stefan, good morning. Maurizio is here, so good morning to you, sir. You made fun of me for adding my dollar CAD short, but it keeps winning. Trump has instructed the Treasury and Fed to weaken the dollar by at least 10% by election. Implies 120 on dollar CAD. What do you think? Yeah, I know I made fun of you. I didn't make fun of you, but you put yourself in a very risky position, because with your dollar CAD, you were starting to short up here, no? Somewhere here, I think we talked about it. And what happens here is you're doing what I used to do a lot. And it's that you have a very nice, healthy position. Like, if you think about it, if you shorted here, I think you shorted for several times. You should have been up maybe on average 700 pip. 700 pip is a big move in the world of currencies. And if you go back through history, you will see that the market almost always corrects. It's only if, of course, if you bought, like, even if, you know, look, imagine you bought here in August 2011, and then, you know, you're up with a solid 1,200 pip. Well, come here September 2012, so like 1 year later, you would have given all that up. And then, of course, it started to rally. And yeah, if you would have kept it here, and then we moved down. So for this, but this was special times to some extent. We had like a very special situation where things were just booming. And then you had that. I don't think we're booming now. There's no reason to anticipate that it's going to start to boom. Obviously, these booms and stuff like that is hard to predict anyway, but I don't think so. And if you look at the charts, we're just coming back down to support. So that's what I was trying to warn you about, that you need to take profits at one point. If you do not book profits, you will get hurt. And it was an excellent opportunity to get out at 133. And here, looking at this today, yeah, the trend continues to be bearish. Now we know that this struggles to trade much higher. And do we have like a excellent pattern to trade here? Unfortunately, we don't. We definitely have a downtrend. And if we take out something like 34.92, we can probably go lower. Yeah, I don't disagree. But it's not like an amazing pattern. It's not a pattern I would put my money on. We talked about this pattern, and that one I strongly recommended, or said that it was interesting. And then you have the different to take profit levels. You have the midpoint. We reach that one. That's the most common thing. In the textbook, they always tell you take the base, but if you always take the base, then sometimes, like this time, you did hit target. but most of the time you do not hit target. Many times you just go halfway and then it goes back straight to you. So that's what I said. I did some, and I think I put some technical software, I think like many years ago, put some technical software in, and it calculated, I think I put something like zigzag or something. I had a developer check it for me. So what the developer did, it sort of looked at all, like, how much was the run up, how much was the correction, how much was the run up, how much was the correction. It was quite a few years ago, so I don't remember exactly how the study was. But the study, what I can remember though, is that the market will usually give up 60% of its gains. So it doesn't matter like what's happening in the world, it will usually give back 60% of its move. And that's why people love like short-term trading in the markets, because you know you can you sell here, and then when it comes back you book some profits, and then it comes back and you sell again. And that's what people like to do. They go in and out, especially on a day-to-day basis. Like even on a very good news day, most of the time you're going to have a correction at least at the first fib. And that is what I was trying to warn you about. Now about this, I must have missed that Trump has instructed the Treasury and the Fed to weaken dollar by at least 10% by the election. Implies 1 to 20. What do you think? I need to check that out. But I know that President Trump obviously wants a lot of things, but people don't usually deliver to it. It might happen, it might not happen. I need to check it out, but he doesn't sway that power with the government. People think that they're doing now, trying to do this to help him. I definitely don't think so. It's just, as we know, GDP in the US and many parts of the world has just plummeted. That's why they're doing all this quantitative easing. I mean, they've done it before President Trump, with other presidents. The Fed would always do this. So I don't think they're doing it to help him. So I don't think they're gonna try to just lower the currency because of it. Of course, you know, I mean, to give you a good example, actually, I'll take that back. I don't think, we'll see what happens, but I don't think it's going to be, what they could do, because this is the example. If inflation remains super low, they might try to lower the currency to weaken and to boost inflation. However, I think that's quite unlikely, because you don't really want to have inflation when the economy is not doing very good. Secondly, when they start to push down their currency, it's going to push up the currency for many other countries. So what's going to happen is now the Europeans are going to say, oh, you know, we're in the middle of a recession and our euro is too strong, our inflation is too low, you know, and these guys are just dumping currencies on us. We'll do the same. So it's a very short-term strategy, that devaluing your currency nowadays, especially if it's been communicated like this. Okay, we're gonna wrap things up. Guys, I want to thank you so much for joining me, and I'll be back on Monday for the next market update. As you know, we changed a bit on the setup, but there might be some more changes coming up very soon. We have developed a new technical indicator, which is short-term in nature. We're gonna give this a bit of more of a try, but maybe next week, if not the week afterwards, we're gonna probably start to do live webinars with those. And what's gonna happen is I'm gonna load the indicator, and then I'm gonna try to trade the market live as it happens. So we'll talk more about that. Can maybe share with you more info on this on Monday, if we can get that indicator back, get it in the indicator ready by then, and have it on the website by then. Okay, have a great day, guys. Thanks so much for watching, and I'll see you guys on Monday. Thank you, and bye bye.